Hey guys, just wanted to make a quick update to what I believe is happening with the short sales and threshold securities. So what I've done is I went through the rulings, tried to highlight the most important things for you guys to understand, and the uh, spreadsheet detailing the history of AMC's threshold rulings. So starting off with this is the show ruling. This is the section B, rule 203B 3. So this is talking about threshold securities, and it says that uh, the participant of a registered clearing agency, and if we go down, it defines a participant as a registered clearing agency, so that's kind of big. It's not like, what a lot of people think, hedge funds or whatever. No, it's literally the clearing agency. So this doesn't fall upon a hedge fund or something, of the lesser amount. It falls on the agency. And you'll see why that's important a little bit later. But so continuing on, so the participant or the clearing agency has to take action on all failure to delivers that exist in such securities 10 days after the normal settlement date, i.e. 13 consecutive settlement days. Now, also, I'm a big fan of defining things before, trying to understand them, because, if you don't understand the underlying definition, how are you going to know? So going to this, so it says the settlement day means any business day in which deliveries of securities and payment of money may be through the facilities of a registered clearing agency. Why is that important? Well, that means that holidays and whatnot, any day that the market's not open, you cannot deliver the securities, so that's not a settlement day. But the days that the market's open, that's one settlement day. So if a security goes through a trading and it doesn't get settled, that is one settlement day from the day that it was open to the end of the day. So that's a settlement day. And it's essentially a business day. Now, specifically, the participant is required to close out the failure to deliver position by purchasing securities of like quantity. I know probably seen it on other areas or other YouTube channels, or maybe even due diligence. But yeah, it says like kind and quantity. So that, unfortunately, I don't know. I think that's kind of broad, and they may be using that as a loophole. But then again, we're starting to see some action that indicates that that's not exactly true. That these guys are struggling a little bit, but we'll get into that later. So, so essentially, they have 13 settlement days. So what does that mean? Well, let's look at this as well. So 5 consecutive settlement days, it puts them on the threshold security list, which you can look up yourself. In fact, I'll show you. So this is the threshold securities. You can see, this is for June. I'll look at today's, or the last trading day would be, the 7th. What am I doing? So the 7th of June, right? Or the 8th. Anyways, getting back to that. So you're looking at these, it takes 5 consecutive days of them settling 10,000 shares or more, or equal to at least 0.5% of the issuer's total shares. So what does that mean? So that means that every day, if the failed to delivers, which are posted a month and a half after, I believe, or a month after, on the SEC's website, if those failed to delivers exceed 2.5% of the total shares outstanding, which is not the float, it's the total shares outstanding, that means that that stock gets put on a threshold list after 5 consecutive days. Now, what does that mean? Uh, well, specifically, it says 13 consecutive settlement days. It doesn't say after, the initial listing on the threshold security. So that means that the 5 days, it's at 5 days once it hits the security. So after that, you have 8 business days, because remember we talked about it's a business day. So before they have to um, uh, purchase those securities of like kind and quantity. And in order to be deemed, let's also look at this. So in order to be deemed a threshold security and thus subject to the restrictions of Rule 203(b)(3), a security must exceed the specified fail level for a period of 5 consecutive settlement days. Similarly, and this is important later, in order to be removed from the list of threshold securities, security must not exceed the specified level of fails for a period of 5 consecutive settlement days. So what does that mean? It's even more important because you might see some, stocks on the threshold list, but they could already have delivered their FTDs because they will still be on the list for 5 days. It later goes on. I've already read this a couple times. Yeah, it talks about flickering. So they did this so that the stocks don't flicker in and out, and so they don't find these loopholes where they can, which they have recently, and I guess those recent rulings have kind of tied things up. But going in and out of the security with FTDs by trading them off. So they did that purposefully, with good intent. But these guys, they really good at getting around good intent. So, and this is another important part. So let's read this. So the selling broker dealer must deliver the security no later than 2 days after the settlement day. If for any reason such security were not allowed delivered within 2 days after the settlement date, the rule would have restricted the broker dealer, including the market makers, from executing additional short sales for the next 90 days, and such security for the person for whose account the failure to deliver occurred, unless the broker-dealer or the person for whose account the short sale is executed borrowed the security or entered into a bona fide agreement to borrow the security prior to executing the short sale. So this is a lot of mumbo-jumbo. Not exactly. It's a little bit confusing. I guess they can borrow shares the next 90 days. I'm not going to act like an expert, but assuming that they can't borrow these shares, or it's really hard to borrow, it's almost impossible, which it seems, we've been seeing a lot of due diligence and people talking about, getting paid interest to borrow their shares. It seems like they are having a hard time borrowing, and so they can't execute any short sales for the next 90 days unless they have shares to borrow. So already in place. It's essentially what I'm getting from this. Now, it also says that, so this part, I just really want to skim over it because it's not that important. So it says requires a participant of a clearing agency. Remember, we said participants are the clearing agencies. Registered with the commission, take action to close out the failed to deliver for 13 remaining settlement days by purchasing securities like and quantity. In addition, Rule 203 states that the participant, any broker, that would otherwise be entitled to rely on bona fide, is prohibited from effecting further short sales in a particular threshold security without borrowing or entering bona fide agreement to borrow the security until the failed business closed out. And then I also didn't highlight this, but this is probably I should have highlighted. So to the extent that the participant can identify the broker-dealer accounts that have contributed to the failed deliver position, the requirement to borrow or arrange to borrow prior to the affecting further short sales should apply to only those particular broker-dealers or accounts. Where a participant enters into agreement with a counterparty to purchase securities as required by Rule 203, and the broker or dealer knows or has reason to know that the counterparty will not deliver the securities, the broker or dealer will not have fulfilled the requirement of the rule. Essentially, what this is saying, and this is once again my interpretation, I'm not a lawyer or a financial lawyer or anything like that, but from what I understand, it's essentially saying that it's not up to the hedge funds or it's not up to an individual, unless they can be identified by the clearing agency for not delivering those shares. So this begs the question, who's fronting the bill? Well, we talked about this earlier. Clearing agencies, the participants, are fronting this bill, essentially meaning that if they can't find the person or entity that is failing to deliver, they have to front it. So it's in their best interest to find that person. I mean, that's the reason why the SEC wrote it like that, is so that it's kind of self-governing. They don't have to do it. They don't have to go in and say, hey, deliver those shares, because the NSCC or whatever entity is already on the hook. And it's kind of funny because you can see the NSCC is plastered throughout this show ruling. If you read through the entire thing, kind of sad, I'm assuming NSCC is getting a lot of bad rep, but they're literally just, an entity that works with other, dealers or brokers or market makers trying to facilitate market operations. Maybe they are, some kind of black hand or whatever, but I don't think so. Maybe. Once again, I have no idea. No one has really any clue because this is all pretty much above all of our heads. But anyways, so now that we've read through these rules a little bit, I think it's important to, well, actually, let's read this last one. So, yeah, this is just, confirming what I said above. So so if they can't find the particular, account that is failing to deliver, they have to do it themselves. So they're essentially, they have to front, whatever the clearing agency, they have to front the bill if they cannot find somebody else. So now I'm going to show you a so this is I put some data together. Let's see if I can get this into okay, here we go. So this is I've included a legend, which includes the threshold list, cleared FTDs, off list, holiday, red day, green day. Essentially, so these red days on the left that you see me clicking, and the green days, that just represents, it closed higher or it closed lower. And then these are the price changes, and highlighted in red is negative price changes from the previous close to this noted date's close. So if it's red and it's got a negative mark, it's negative. If it's green, it's positive, right? And I've also annotated the closing price along with the FTDs for those dates, if available, because we're going to look at recent dates as well. And the shares outstanding. Now, why is shares outstanding important for this? Well, as mentioned in the ruling, it has to have 0.5% of the clearing threshold, or of the shares outstanding, FTD, for it to show up on these threshold lists. Now, you might be saying, well, you go through this list and you're like, wait a second, 21st of June, the list didn't show up until the 25th, right? Well, yes, but I'm about to show you something that I don't think a lot of people are looking into, and I think it's actually quite important. But anyways, and so these yellow highlighted portions, so this is the cleared FTDs. So if it's highlighted yellow, this is where I am assuming they cleared the FTDs so that they would be off that list. Now, mind you, once they clear those FTDs to under 1.5% or under 10,000 shares, they have to maintain that for 5 days. So I'm assuming, you shouldn't assume, but that by 2nd of December, they've been, under 0.5% of FTDs for 5 days. Or I'm assuming that by 29th of December, they've been, under 0.5% for 5 days. And you'll see that, yes, in fact, the data does match. Now, let's, the off list, also holidays. So this just means that it's either not on the threshold list, that's why I highlighted it gray, or there's a holiday. And sometimes I annotate it if I think it's important, because for the holiday, for instance, this one, people would be like, okay, so why is the 26th? There was no information or no data. Well, that's because it was a holiday. So I just wanted to annotate that. But looking at it this way, so you got also, sorry, the threshold list is the orange portion. So that's when it entered the orange section. So if you look at the first, going back a little bit, just enough, because honestly, if you're on the threshold list, inconsistently, AMC's, this is the 3rd time that I see as far back as, November 2020. It kind of does show, the whole reason they made it is because of naked shorting. And they, the SEC in their show regulation that you just read, they did talk quite a bit about, how this should I be able to identify and, correct the problems. Now, I don't understand if it's a repeat offender, why they're still allowed. But anyways, that's, jibber jabber. So if we look at November, the first time that, I'm recording that they're showing significant interest in being on the threshold list. So you can tell that, 5 days back from when they first hit the threshold list on 18th of November, right? 1 million FTDs, which of 85 million, that would be over 1%. And to get under, 0.5% of 85 million, what would it need to get down to? Well, approximately, 400,000, right? So let's see just how interesting this gets, right? So you got settlement day 1 with 1 million shares, settlement day 2, 4 million, 1 million, 2 million, 9 million. You're like, wow, that's a lot, especially on a 80 million. That's, that's a decent amount of the shares outstanding. Well, then it goes to 0 FTDs. You can see that it actually inflects upon the price. When they deliver these shares, you're starting to see an increase in the price, when it goes from 4 million to 1 million, that's 0.14. It might not seem like a lot, 14 cents, but off of a $2.97 ticker, that's a lot of money, especially if you have 10,000, 20,000 shares, whatever. And so let's see another decrease from 9 million to 0. This is interesting. So why do we think that it goes down and the price goes down? Well, I'm not so entirely sure, but it's very interesting. It's something maybe one of you guys out there can look into, because it's very interesting to me. Now we have the 20th of November, right? It's at 0 again. Then we see a 16 cent rate increase, which is once again huge, and then a 46% increase, or 46-cent increase, and then we get 1.1 million shares. Maybe that has to do with the 9 million shares being delivered equally. I don't know. Maybe the SEC's, doing something about it. I have no idea. Maybe it's, it's all speculation from here. But then, you start to see it go down. You can see in the charts later on, yeah, see, it goes down in price. But conveniently, right? So they got off the list. But how much do you need to get off the list? Only 319,000. Or only under 400,000, right? 425,000, I would think. But I mean, that's very interesting that they managed to stay just below that. But still, I want you to realize that 319,000 shares not being delivered to a particular security, that's kind of a big deal, especially in one day, because it goes 0 to 319. Now, I want to remind you that these FTDs from the SEC website, it's not like, oh, 9 million, but they still have 9 million now that it's zero. No. If it says zero, it means that they cleared those FTDs. There's no, it's listed on the SEC website that it says that it's the total outstanding shares of FTD. So, but it is very interesting that they keep it just below 450,000 for just enough days, right? It's a little bit sketchy. Now let's go to December. So this is way before everyone wants to think that, January is when we had a large amount of FTDs. Well, we did, but these are the most consecutive days where the FTDs were held, which in my opinion is more damaging because these are shares that should be going into the stock market. And when the price is $3.56, and there's only an 85 million float, 4 million FTDs, almost 5, is a huge deal. And you'll see, 42-cent increase here when they deliver 1 million shares. And, from 2 million to 400,000, you get a 23-cent increase. It's a big deal on $4. But, this is the second time. So starting the 7th of December, I just wanted to highlight this because this isn't part of the second threshold. It's just, it could have happened, but it's very interesting. Now, the reason I say that is, like I said, 4 million, they would need for 85 million shares outstanding as of the dates. That's the only thing I could find for shares outstanding as of these dates. So 4 million, wow, that's interesting, right? So they get it to just 467,000 on the fourth day, which if you recall the regulations, why is that interesting? Well, that's really interesting because I'm assuming it's a little bit over 85 million. So 450,000, remember we talked about that, would be the minimum required to get that on there. Whoa, so what you're seeing is they know this rule and they're obviously dancing around it. But they can't, obviously, it seems they can't get around it the second time. I have a feeling that the media played a narrative in this. This is when AMC was talking about bankruptcy, and so you can see the price goes down quite a bit, and they withhold a lot of shares, right? 2 million, and now you're talking about $3 on an 85 million shares outstanding stock. That's a huge deal, and to the right, I posted this because this is an article from 14th of December, 73-cent decline. While they had $100 million in financing in exchange for 22 million shares from a company that specializes in distressed debt and talked about running out of cash before 2020 end or early 2021. Also, vaccines rumored to not be distributed in time. Why is that important? Because it's super bearish on a movie theater stock, which at the time, by the way, GME was kind of just a whisper in the wind, and AMC was nothing but maybe a fart. Not trying to be crude, but it wasn't really being talked about a whole bunch. At least not at a, it's a movement now. It's literally a social movement. So now you're looking at the price declines quite a bit. It goes from $4 to, almost $2 and some change within, a month, which is terrible. Well, a little bit less than a month. But yeah, like I said, so these 4 days, they managed to stave off being on the threshold list, but then, wow, they get on it. I'm pretty sure this was a campaign, this whole section was a campaign for them, maybe even here too, but it was just a campaign to see how much they can really just push this thing down. And to be fair to, historically, hedge funds, they use all the tools in their assets or in their toolbox to, essentially, I know people don't want to hear this, but it's been going on since, the 60s when block trading happened. They're using these abilities to short the stock. They're going to do anything they can to, play their part. I've seen where commodities are influenced on false, hurricane perceptions, or people put out bad weather predictions saying it's going to be too hot one year, so that oil, it influences the price of oil, and people are thinking, wow, that's so stupid. I doubt that can happen. Well, it happens. It happens. It's part of the financial industry. It's why hedge funds are the most competitive, because they have all the insider information. And, you see it with Cohen, you've seen it with Soros, you've seen it with all the famous hedge fund managers. But that's getting a little off track. So, getting back to it, it does look like a campaign to try and bring the price down. Now you're looking at the 17th of December, right? So this is when they hit the threshold. So if you go back 5 days, that would put you on the 11th of December, which makes sense because, once again, you go from 467, this is way above 0.5%, and then, obviously these are all above 0.5%. This is entirely above 0.5%. But interesting, once again, 5 days out, it goes down to 222,000. Perfect. It's below that 0.45%. And then 1, 2, 3, 4, 5 days, it's off the threshold list. Smart. They know what they're doing. They understand how to manipulate the stock, because once you have the downward pressure on stocks, usually it just continues to go down. Now, I honestly think that there's quite a bit of manipulation, because now you jump forward to today's day, right? So we don't know. We don't know the FTDs right now. But I can pretty much guarantee, obviously, according to the threshold list, that it's above 0.5%, which of 500 million would be 2.5 million, right? So this has got to be at least 2.5 million, which is great for them. They diluted the the CEO. He did what he had to do to keep AMC afloat, but unfortunately that means diluting the shareholder. So now you have 500 million shares, and now you have so much more room to do those FTDs, because a lot of shares. However, they're exceeding 2.5 million. Now, historically, they don't hold back once they start FTDing, right? So look at this. 450,000. That's double it. That's double. That's 10 times right there. That's 20 times right there. So it's very possible that these days, like this 2.64 days, it could be 10 times the minimum threshold. Which what would that be? 25 million shares? That's a lot. Well, I can't predict anything, and they probably have ways of getting around things, but let's say that it is 25 million. That's a huge deal. And it would make sense that they delivered some of those shares on the 28th of June. But besides that, I don't see them delivering more shares. And since, considering that AMC is still on the threshold list, right? Considering that. So what does that mean? Well, 1, 2, 3, 4, 5. So they still haven't delivered, even though this, you got this area right here. This is 1, 2, 3, 4, 5, 6, right? So from this day, they still have failed to deliver, and it's still over 2.5 million, and they still have to deliver it. And I think a lot of people don't understand that this eventually, when it gets delivered, it will come off the threshold list after we see the effects of it. So, it's important. I mean, I'm closing in on 30 minutes. I feel kind of bad. I don't know if anyone will actually watch this, but it's a big deal to understand how this works, to not get your hopes up, or to understand why it's happening. It does say 13 days required to deliver. So let's real quickly look at that. So how many days do they already have? Well, I conveniently put the settlement days here, right? So last time they were closing on 13, but they already delivered those failed delivers. They closed in on 11, but they already delivered those failed delivers at 8. So 8 to 10. But now we're at 12. So the question is it 13 days of that day, or is it today? So is it today or is it tomorrow that they're forced to deliver? And then we also read that rule about they have 2 settlement days to do that. So do they also have those 2 settlement days? So, I mean, they're going to try and probably juice this as much as they can, so probably try and push it as far as they can. So it's probably going to be somewhere around, a couple extra days. And yes, I heard people talking about, well, GME was on the list for a month. Yes, if you look at GME historically and their failed to delivers, what do you see? Well, I was looking through some other due diligence, and the guy was talking about, oh, it's interesting. Every 13 days, it's +2. Well, yes, because in the ruling, you have +2 days. Now, just because you're forced to deliver those shares. Now, you're not forced to deliver the shares. Let's say, I'm showing you this, so this yellow portion. Once you deliver those shares, you can fail to deliver again. You'll just stay on the list. And then you'll have another 13 days. Does it suck? Is it corrupted? Should they stop it? Probably. But that's good news for us. It means that, whatever's happening right now, it's all part of the game, But I think we are getting very close, and hopefully if you understand most of what I'm saying, I tried to make it as plain as possible. But thank you. Thank you for watching, and I'm not really doing this for YouTube views at all. Actually, let me reiterate. I'm not doing this at all. I just want to inform people out there because it hurts me to see people not understand things. And there's so much misinformation going around. People say, this or that, and it would be ludicrous to think that there's not people on social media that are paid to shill or paid to do these things. I mean, you're talking about billions of dollars on the line. They've already lost billions. Of course they're going to say things. It's important. In the military, they always say, intelligence, truth is in intelligence. Truth is in, understanding what's happening. Because if you don't, well, then, that's fine. You can maybe get lucky and get by in life doing those things. But to understand something at its core, understand why things happen, you'll be so much better of a trader, so much better of understanding the markets, and so much better at understanding that not everything's terrible or not everything's messed up. Yeah, the SEC is probably not doing the job on this particular stock, and probably multiple ones that are affected by the same entities, but they have ways of correcting it, or at least they should. Maybe they do need an overhaul, but whatever the case may be, I just want the best for the community here. So, if you have any comments or want to ask about anything, we can, as a community, look into it together. You have a lot of YouTube content creators. I'm not saying they're bad, not saying they're good. A lot of them are great for, exposing the movement. But, sometimes they don't really read into what they say, and I don't blame them because they don't have too much time. They're literally just reading off their screen. That's all they can do. Because some of those guys have full-time jobs. Some of them are traders, They can't screen for stocks and do 1 million hours of due diligence or research on these things. It's up to the community to take it into their own hands and do that for themselves. And no YouTube content creator is going to, do that for you. You literally have to do that for yourself. And I guarantee you, once you start looking into this yourself, which I'll leave links on the bottom so you can, you'll feel more confident in your investments. And hopefully in the future, you can do the same with your, other investments and other trades. I wish the best of luck to you, and good luck.